Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So far 12 problems I have completed on this funds flow analysis. This is the last and final video of problems on funds flow analysis. The 13th and 14th, these two problems I'm going to continue in this video. So after watching so many problems, I think you are in a position to attempt the problem on funds flow analysis, which consists of statement of changes in working capital and statement of source and application. So one suggestion I am giving is don't join in between. So if you want the perfect knowledge, watch all the videos from beginning till end, one after the other. Then only you can get the command. And one more thing, be thorough on the theory. Without understanding the theory, you should not jump to the problems. Every problem will be a peculiar one to you. First of all, you must know what do you mean by funds flow statement, how it is prepared, what are the two statements, what are the items to be taken in working capital and source and application. All these things be clear in mind. Then you come to the problem. So before starting the 13th problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. Always keep it ready. Now 13th problem I am reading out. From the following balance sheet of HM Company Limited, prepare statement of changes in working capital and funds flow statement. Balance sheet as at 31st December, year ending. So rupees in lakhs, actually 3 zeros are given. It is not 3 zeros, it is 5 zeros. All the rupees are given not in thousands, in lakhs. So on the top make one correction. Instead of 3 zeros, take 5 zeros. 5 zeros means lakhs. All the amounts are given in lakhs. Example, 2.5 lakh means 2,50,000. 3.5 lakh means 3,50,000. Like that, you have to convert all the figures into lakhs. So here liabilities are given. Equity share capital, 8% redeemable preference share, general reserve, Pll account, proposed dividend, creditors, bills payable, provision for tax. And asset side, goodwill, land and building, plant, debtors, stock, bills receivable, cash in hand, cash at bank. Balance sheet given. Now additional information, depreciation of 10,000 on plant and 10,000 on land and building has been charged. Second, an interim dividend of 15,000 has been paid during the year 1991. Income tax of 25,000 has been paid during the year 1991. This is the complete problem. First of all, we have to make the statement of changes in working capital by taking only current assets and current liabilities. So you can see what is the heading, statement of changes in working capital for the year ended. 1990 last year, 91 current year. Current assets. Now see the balance sheet, asset side, what are the current assets? That is debtors, stock, bills receivable, cash in hand, cash at bank. These are the current assets. Goodwill, land and building, plant. These three are the fixed assets. Don't take fixed assets, only current assets. So all debtors, stock, bills receivable, cash in hand, cash at bank, whatever is given in the problem, same amount I have taken. Like debtors. Debtors 1.00 means 1 lakh. And 1.40 means 1,40,000. So here you can see I have taken 1 lakh, 1,40,000. Stock 0.55 means 55,000. Similarly 0.85 means 85,000. So 55,000, 85,000. Like this I have taken all current assets. Now current liability, we are given proposed dividend, creditors, bills payable, provision for taxation. Actually 4 current liability. But proposed dividend and provision for taxation, we can treat it as a current liability or we can treat it as an appropriation of profit. Two methods of treatment of this proposed dividend and provision for taxation. If nothing is given in adjustment, then we would have treated those as current liability only. If nothing is given regarding dividend and provision for taxation, only in the balance sheet if it is given, then we would have taken it as a current liability. But here in our problem, adjustments are given, an interim dividend paid and income tax of 20,000, 25,000 has been paid. When adjustment is given, we will not treat it as a current liability. will treat it as an appropriation of profit. So only current liability I am taking, that is sundry creditors and bills payable. If you want to treat current liability, proposed dividend and provision for taxation, you can take it. You can take. Then in that case, the adjustment, whatever adjustment is given, interim dividend and provision for tax, that should be ignored. So if you want to take it as a current liability, take it both, proposed dividend and provision for taxation here. In that case, whatever adjustment are given, ignore it. Then you are right. But I am not treating it as a current liability. I am treating it as an appropriation of profit. So here only creditors, bills payable, these two current liabilities I am taking. So A is the total of current assets, B is the total of current liability, A minus B is the working capital, current asset minus current liability. 2 lakh minus 65,000, 1 lakh 35,000. Similarly, 3 lakh minus 78,000, 2 lakh 22,000. Now you can see working capital increased 1 lakh 35,000 to 2 lakh 22,000. There is increase in working capital by 87,000. 87,000. Now we want to check whether 87,000 is correct or not. So increase, decrease column. 1 lakh to 1 lakh 40,000 increase. 55 to 85, 30,000 increase. 15 to 35, 20,000 increase. 20,000 to 15,000, 5,000 decrease. And 10 to 25, 15,000 increase. Current liability opposite. 55,000 to 70,000. There is increase, but we'll write it down in decrease column. Opposite. Here 10 to 8 decreased, but we write in increase column. Last one increase, so we write the amount in decrease column. Now take the total of increase and decrease, 1,07,000 both equal. It means 87,000 answer is correct. So we have completed statement of changes in working capital. Now we'll come to statement of source and application of funds. Here the making of statement of changes in working capital is very simple. There are no adjustments, but the problem arises in case of source and application. So here we need your concentration. Important. First of all, share capital. Equity share capital last year 2,50,000, current year 3,50,000. So 350 minus 250, 1 lakh rupees the issue of shares. Because share capital increased. When the share capital increases, when the company issues the shares, 1 lakh rupees. Right? Next, 8% redeemable preference shares. So last year preference shares was 1,50,000 and current year preference shares are 1 lakh. So preference shares have decreased. It is called redemption of preference shares. The company has repaid the amount of preference shares. It's an application. When share capital increases, it's a source. When share capital decreases, it is application. So redemption of preference shares 50,000. 2 items completed. Third, general reserve. See here, last year general reserve was 30,000. Current year general reserve is 60,000. That means during the year 30,000 rupees are transferred to general reserve. So transfer to general reserve should be taken under non-cash, non-operating expenses. Already in the previous problem also I told you. So this transfer to general reserve 30,000. How 30,000? 60,000 minus 30,000 is 30,000. Here I tell you. Next, profit and loss account. The profit and loss account last year was 30,000. Current year it is 50,000. So how much is the increase in P&L account? 20,000. So I am taking starting point. Increase in P&L account balance. 50,000 minus 30,000. 20,000. Right? Next, proposed dividend. See, when I am treating dividend and provision for taxation as an appropriation of profit, then in that case, the proposed dividend of last year is assumed as paid during the current year. So last year, how much is the proposed dividend? 25,000. 25,000 is the proposed dividend last year, and we assume that last year's dividend is paid. So here you take dividend paid 1990 last year 25,000 and current year's proposed dividend of current year is 30,000. and this 30,000 should be taken as a non-cash item. So here proposed dividend 1991, current year proposed dividend 30,000. Right? Next, creditors. The creditors and bills payable already we have taken, ignore. Then provision for taxation. Provision for taxation, opening 20,000, closing 32,000. We have to open the account. Last line it is given, income tax of 25,000 has been paid during the year. Income tax 25,000 paid. So here you can see provision for taxation account. The last year provision for taxation was 20,000. Here by balance brought down 20,000. Assets will show debit balance, liabilities will show credit balance. So here provision for taxation is a liability. The credit side by balance brought down 20,000 and current year balance is 32,000. So to balance carried down 32,000. Opening, closing. Now last line it is given, income tax of 25,000 has been paid during the year. Income tax paid. This should be taken on the debit side. So debit side you should write on to bank. Tax paid. How much is the income tax paid? 25,000. Right? Now, how much is the total on the debit side? 57,000. 57,000 is the total on the debit side. Take same 57,000 on the credit side. 57 minus 20 is 37. This 37,000 is the balancing figure. This is P&L account, profit and loss account, balancing figure. Provision made during the year. Provision made during the year. So in the problem it is not given provision made. By preparing this account we come to know there is a provision made during the year for rupees 37,000. Now we have to take tax paid. How much is the tax paid here? 25,000. This 25,000 should be taken on the application side. Income tax paid 25,000. And provision for taxation. Provision for taxation made during the year 37,000. This 37,000 will be taken as a non-cash item. Here you can see provision for taxation during the year 37. So opening and closing balance we should not take. Opening and closing balance we should not take. Only tax paid application side and provision made during the year non-cash item. That's it. The liability side all items I have completed. Now I am coming to the asset side. Goodwill last year 1.1 means 1,10,000 and current year 1 lakh. The goodwill decreased. That means goodwill is written off. Goodwill written off. So here goodwill written off, last item you can see 10,000 rupees non-cash. Next, land and building. Land and building last year 2 lakh, current year 1,80,000. And adjustment it is given depreciation of 10,000 on plant and 10,000 on land and building has been charged. The depreciation is provided on plant as well as land and building. So first plant. Plant value was 60,000 last year, current year 1,20,000. So I have opened the account, plant account. Opening balance. To balance brought down 60,000, by balance carried down 1,20,000. Opening closing balance of plant I have taken. Now depreciation 10,000. So here I am taking by depreciation 10,000 given in the problem. Now take the total on the credit side, 1,20,000 plus 10,000, 1,30,000. 1,30,000. From 1,30,000 deduct 60,000. 1,30,000 minus 60,000, you will get 70,000. This 70,000 is the purchase of plant to bank, balancing figure. Purchase of plant. So during the year plant is purchased. When plant is purchased there is cash outflow, application. So here you can see purchase of plant 70,000. Right? Similarly depreciation on plant 10,000, non-cash item. So depreciation on plant 10,000. Over. Building also same way. Opening balance of building 2 lakh, closing balance of building 1,80,000. depreciation. So by depreciation 10,000. Now see which side is more, debit side is more or credit side is more? Debit side is more, 2 lakh. So here I am taking 2 lakh rupees. Here also 2 lakh. So 2 lakh minus 1 lakh 90,000. So 10,000 is the balancing figure here. By bank, balancing figure. It is the sale. When debit side is the balancing figure, it is the purchase. When credit side you are getting balancing figure, it is the sale. That means during the year 10,000 worth of land and building was sold. When we sell the land and building, there is cash inflow. The source side, sale of land and building 10,000. And depreciation of 10,000 rupees on land and building. Here, depreciation on land and building 10,000. Right? So, goodwill over, land and building over, plant over, debtor, stock, bills receivable, cash in and cash at bank all over. Now, depreciation over. Interim dividend of 15,000 has been paid during the year. So, during the current year, some interim dividend has been paid. How much interim dividend paid? 15,000. It will appear twice. Interim dividend is an outflow. So, application side you can see interim dividend paid 15,000. And again interim dividend should be taken as a non-operating item. So, here interim dividend paid 15,000. That's all. We have taken all the items. Now simply if you add up all the values, you will get funds from operation 1,62,000. So 1,62,000 is the funds from operation. Take it on the source side. Funds from operation. Now here you have increase or decrease. Increase in working capital 87,000. This should be taken on the application side. So here increase in working capital 87,000. That's all. If you do not commit any mistake, the total of source and application must tally. Now if you see here, all the values are ticked, 2,72,000. Here also all the values are ticked, so 2,72,000 tallied. That means we have done correctly the problem. We have done the problem correctly. That's why our total is same. This is the end of problem number 13. Come on, now I am starting the last and final problem on funds flow analysis. Problem number 14. This is the final problem. From the following balance sheets of Pioneer Limited as on 31st December 1993 and 31st December 1994. So current year 1994, last year 1993. Prepare a funds flow statement, a statement of changes in working capital. Balance sheet is given. Share capital, general reserve, profit and loss account, sundry creditors, bills payable, provision for taxation, provision for doubtful debts. Goodwill, building, plant, investment, bills receivable, stock, debtors, cash at bank. This is the complete asset and liabilities. Adjustment, depreciation charged on plant was 8,000 and on building 8,000. Provision for taxation 38,000 was made during the year. Interim dividend of 16,000 was paid during the year. That's it. First of all, we will make the statement of changes in working capital by taking current assets. The current assets are bills receivable, stock, debtors, bank. Bills receivable, stock, debtors, bank. These are the current assets. Whatever values are given in the problem, same values I have copied. The total current assets are 1,13,200, 1,21,600. Now current liabilities. Under current liabilities, we are given sundry creditors, bills payable, provision for taxation, provision for doubtful debts. Among these four, provision for taxation, we are not going to treat it as a current liability. We can treat it as an appropriation of profit. So we will open the account. We'll open the provision for taxation account just like the previous problem, right? So three current liabilities will take, that is sundry creditors, bills payable and provision for doubtful debts. Total is 19,200, 13,600. A is the current assets, B is the current liability. Current asset minus current liability, working capital. 94,000 last year, current year 1,08,000. So there is increase in working capital by 14,000. Now in order to check whether this 14,000 is correct or not, we open the column increase or decrease. So here there is increase by 2,400, here decrease by 13,200. increase by 2000, increase by 17,200. Here 16 to 10,800 decrease, but we write the increase column because a decrease in current liability will increase the working capital. Opposite rule. 2,400 to 1,600 decrease, so we write the increase column. Here it is increased, so decrease column. Last one, increase in working capital, we will take in decrease column. The total of increase and decrease are same. That means our answer of 14,000 increase in working capital is correct. Now I am coming to the statement of source and application of funds. First of all, share capital. Last year share capital 2 lakh, current year 2 lakh, no change, ignore. Neither surplus and neither sources nor application. General reserve last year 28,000, current year 36,000. So during the current year there is transfer to general reserve by 8,000. 36 minus 28. 8,000 rupees are transferred to general reserve. It will be taken under non-cash item. So you can see here. Transfer to general reserve 8,000. Right? Next one is Pll account. The profit and loss account last year 32,000, current year 26,000. So there is decrease in general reserve. So I am taking the starting point. Decrease in Pll account. Decrease in Pll account. 32,000, 26,000. So decrease is 6,000. So I am writing minus sign because there is decrease. Decrease in Pll account. That's why I am writing minus 6,000. Next. Sundry creditors, bills payable already we have taken. Now provision for taxation last year 32,000. You can see the account. Provision for taxation account. Last year balance is 32,000. By balance brought down 32,000. And current year balance is 36,000. So debit side 36,000. Opening balance and closing balance. Now last line it is given. Second point. Provision for taxation 38,000 was made during the year. The provision made during the year will be taken on the credit side. The credit side by profit and loss account, provision made during the year 38,000. Now we can find the balancing figure. The credit side 32 plus 38, 70,000 is the total on the credit side. 70,000 minus 36,000. The balancing figure is 34,000. What is this 34,000? Tax paid. Previous problem, last problem, tax paid was given and provision we have calculated. In this problem, provision is given and tax paid we have calculated. So balancing figure is tax paid. This is the balancing figure. Tax paid. Now two items we take. Tax paid 34,000. This will be taken on application side. Income tax paid 32,000. And provision made during the year 38,000. This 38,000 will be taken as a non-cash item. So here provision for tax made during the year 38,000. So provision for taxation over. Provision for doubtful debts we have already taken. Now asset side goodwill. Last year 24,000, current year 24,000, no change, ignore. Then building. Building last year 80,000, current year 72,000. And how much depreciation provided on building? See the adjustment, first adjustment. Depreciation charged on plant 8,000, building 8,000. So here I have prepared the building account. Last year balance building is 80,000, current year 72,000. 80,000, 72,000. And depreciation provided on building is 8,000. So by depreciation 8,000. No balancing figure. Debit side and credit side totally same. 80,000, 80,000. Neither purchase of building nor sale of building. Only depreciation 8,000 is there. That depreciation is a non-cash item. So depreciation on building 8,000. Right? Now plant. Plant last year 74, current year 72. So to balance brought down 74,000, by balance carried down 72. And during the year depreciation provided on plant 8,000. So by depreciation 8,000. Now take the total on the credit side. 72 plus 8, 80,000. From 80,000 deduct 74,000. 80,000 minus 74,000. 6,000 is the balancing figure. This is the purchase of plant. Debit side, if you get the balancing figure, it is a purchase of plant. The application side, purchase of plant 6,000. Or next investments. Last year investment 20,000, current year investment 22,000. So during the year investments are purchased. The purchase of investment application side, this is 2,000. The plant over, investment over, bills receivable, stock, debtors, bank, already we have taken. First adjustment depreciation we have taken. Provision for taxation we have taken. Interim dividend paid 16,000. This will appear twice, just like the previous problem. Adjustment, it is given interim dividend paid twice. Application side, interim dividend paid 16,000. And again this 16,000 will be taken as a non-operating expense. So here interim dividend paid 16,000 over all the items we have taken. Now take the total of these funds from operation. Minus 6,000 plus 8,000 plus 38 plus 8 plus 8 plus 16. 72,000 you are getting funds from operation. So here funds from operation 72,000. Now increase or decrease? Increase in working capital 14,000. So here increase in working capital 14,000. All the items I have ticked. So source side only 72,000. If you take the total on the applications, you are getting 72,000. When source and applications are same, that means you have done correctly. That's all. So this is the end of 14th problem and the last problem on funds flow analysis. So apart from short problems, the main long problems, 14 problems, I have explained each and every problem in detail. So if you have watched all the problems, now you are in a position to attempt any problem on funds flow analysis. Inshallah, in the next video, I'll start the problems on financial statement analysis. Next video, I'll start on that topic. Problems on financial statement analysis.